Let's get started. Hello, everyone, and welcome to another quarterly update in Q&A brought to you by the team at Apollo Crypto. I'm Henrik Andersson, co-founder and CIO, and today I'm joined by Pratik Kala, our head of research and portfolio manager. For everyone new, Apollo Crypto is a multi-strategy investment fund manager that is headquartered in Melbourne, Australia, and we invest globally. We have more than 7 years successful track record, and we have 3 active funds. We are focused solely on managing portfolio of crypto assets and strategies on behalf of wholesale investors, family offices, and fund of funds. Thank you for everyone attending today. We hold these webinars on a quarterly basis. We also publish a weekly newsletter, and we also do long-form quarterly research. You can head to our website, apollocrypto.com, to subscribe and find previous research and blog posts. The purpose of this webinar is to inform our investors and followers and to provide general update on the crypto markets and our funds. As a reminder, this is general discussion and is not to be taken as financial advice. Please do your own research when considering an investment in the crypto markets. As always, we're happy to take questions from the audience. So please submit any questions as early as you like in the Q&A feature, and we will answer those questions at the end of the webinar. With that said, let's get started, and I'll share my screen. 1 second. There we go. Hopefully you can see my screen. So the agenda for today's webinar. First, we'll recap the second quarter. We'll talk about our funds. And we'll also talk about relevant event and news that happened in Q2. And then we'll move on to outlook and how we position our portfolio before we take Q&A. So this is a market view year to date. Very strong performance from Bitcoin today. We just reached an all-time high of $111,000 US dollar. Ethereum, as you have seen, underperformed heavily in the first quarter of this year, and it's been catching up and actually been outperforming in the second quarter of this year. And we are positioning our portfolio accordingly. So we are starting to weight up our Ethereum holdings in our portfolios. The equity markets have been performed strongly since the tariff scares in April, and major indices such as S&P 500 and the ASX 200 here in Australia are sitting at all-time high levels. All right, so let's give you an overview of our funds. So our flagship fund is the Apollo Crypto Fund, which we've been running for 7.5 years now. The Apollo Crypto Fund gives you a concentrated portfolio of all our best ideas. And the overwhelming part of the portfolio is in liquid tokens, but we also have some early stage primary deals as well, and exposure to those. And we've seen a strong performance since the inception of the fund. And I should say that in Q2, we saw strong performance and outperformance versus Bitcoin. So if you look at the Apollo Crypto Fund in the second quarter, it was up around 28.1%. And Bitcoin in AUD terms was up 24%. So we have seen a strong outperformance recently versus Bitcoin. The Apollo Crypto Fund is really designed as your kind of one vehicle to get exposure to the crypto markets, and it's an Australian unit trust. Our second fund is the Apollo Crypto Frontier Fund. It's a higher risk, higher return potential fund. It's a concentrated portfolio of what we call altcoins. That's basically crypto assets outside Bitcoin and Ethereum. The vast majority of the portfolio is liquid, and it's a US dollar denominated fund, and it's a fund that is managed out of the Cayman Islands. And it's a liquid fund like our other funds with monthly liquidity. And we have seen a strong performance in the Frontier Fund as well. In Q2, the Frontier Fund performed 45%. So that's a very strong performance. As a comparison, Bitcoin in US dollar terms performed 29.7% in the second quarter. The third fund that we manage is the Apollo Crypto Market Neutral Fund. It's a very different fund to the other two funds. It uses stable coins to obtain a yield in decentralized finance, and it's very consistent returns over time, typically 1 to 2% per month, with very low volatility. So the volatility as a measure since inception is only around 6%, as comparison to the stock market that's typically 20% or thereabout. And we've been running this fund for 4.5 years now. And before that, this was part of the main fund as a strategy within the fund, and we thought it was very interesting, so we spun it out as a separate fund in 2020. So if you're looking for more consistent returns over time, this could potentially be a fund for you. And it's a US dollar denominated fund as well. So that's a little bit about our funds, and then I'll hand it over to Pratik to talk about DATs.
Thanks, Henrik. It's very interesting what's happened in the markets recently with regards to crypto, specifically in the public markets. There's a rise of a new type of company called digital asset treasury companies, or DATs. I'm sure if you're in the market, you might have heard of MicroStrategy, now called Strategy. But in the last quarter, there's about 150 companies that have come out applying a similar strategy across multiple different assets. So it started with Bitcoin, but they're also doing with Ethereum and Solana. Now, the space moved very rapidly, but people may ask, what is this company? Why are people even buying it? Why are some of these stocks going, a 5 or a 7x multiple in a month after converting to a digital asset treasury company? So let's talk about what these are and why people are, going after these companies. Today, if you want to buy crypto or get exposure to crypto, you effectively have three options. One is you buy an ETF. They are only available for Bitcoin and Ethereum today. The second is you open up a cryptocurrency trading account and decide to purchase Bitcoin or Ethereum or a various range of cryptos by yourself. But there you run the risk of, hacks and security and all of those, which is a big hurdle for a lot of people. You could also invest in a fund through us, but ours is restricted to sophisticated investors only. Now, the third type that's come up in the last quarter is digital asset treasury companies, which are effectively companies whose sole purpose is to buy, acquire, purchase, and grow a digital asset stockpile, whether it's Bitcoin, whether it's Ethereum, whether it's Solana. These were previously zombie companies that had, they're slowly dying effectively. And a lot of them have now pivoted to being a digital asset treasury company. Now, companies are interesting, and that's why they've gone up a lot, because companies have various ways of financing their purchases. Companies can issue bonds, they can issue converts, some of them have options, some of them can issue warrants, and there's a wide gamut of things that a company can do to raise money today, including the traditional share dilution, where you could dilute up to 20% without any, without majority shareholder approval, in often cases in many jurisdictions. So what these companies are doing is they're finding creative ways in the capital markets to effectively go out and purchase digital assets and then store them and effectively grow them through various means. The typical question most people ask is, how do we measure what these companies are trading at and their actual stockpile, and why are people paying a premium? So it's a very new type of company. It's only become very popular in the last quarter. I expect this trend to go on for another decade and many M&A opportunities as well that will happen. And this is going to become an integral part of the crypto market. So how do we actually measure these? There's roughly 10 new metrics to measure these, but the most easy one is something called MNAV. NAV being net asset value. M is a multiple of net asset value. So imagine if you're a company, you've got $10 million of Bitcoin and your market cap is $10 million. So your NAV is effectively, or your MNAV is effectively 1. However, if your company's market cap rises to say 20 million, but the underlying assets that you own, the Bitcoin that you hold is still 10 million, then your MNAV becomes 2. The majority of the people are monitoring these by MNAVs, as in how much of a premium are people willing to pay for these companies compared to their underlying assets. And why are people paying a premium? So that's a big question. It's because a lot of people think that these companies will be able to grow their digital asset treasury stack faster than just holding a spot Bitcoin or Ethereum or Solana inside cold storage or inside an ETF structure. And there are multiple reasons for this. Today, for example, ETFs cannot stake, ETFs cannot lend, ETFs cannot issue debt. Hedge funds, for example, cannot issue long duration debt either. We can typically take loans and they're subject to margin calls, but companies can issue debt as long as 5 or 10 years at a fixed interest rate and acquire digital assets. So a lot of investors think that these companies with the right governance and leadership will be able to acquire digital assets faster than they would themselves. And that's why a lot of people are willing to pay a premium for some of these companies. Now, some of these examples on the slide over here is effectively Strategy. Strategy is the largest. What they're doing is innovating by creating a credit curve. So they've issued multiple products that target the fixed income market. The fixed income market is effectively starved for yield, and Strategy has issued a bunch of products called Strike, Stride, and Strife that are offering yields between 7 to 12%, backed by Bitcoin. So Strategy is going and creating a credit curve. They're the first and the foremost doing that. And so they're seeing a lot of demand for their stock in these products. Metaplanet is in Japan. It's the rising star, and it's rising incredibly rapidly. And it is creating a favorable vehicle for Japanese investors. So specific to Japan, there's no ETFs in Japan that are approved today. And there's an exorbitant amount of tax to purchase cryptocurrency in Japan. Capital gains is about 55%, I believe. However, if you purchase an equity, the tax treatment is different. So there's a thing called NISA. You can consider it like superannuation in Australia. It's a subsidized tax if you purchase things within that vehicle. However, Bitcoin and Bitcoin ETFs are not approved within that vehicle, but an equity is. So Metaplanet is effectively tapping an entire new type of investor that wants access to Bitcoin, but cannot because of regulatory and tax reasons. There's a new one that came up called XXI, or 21 Capital. They are not only acquiring Bitcoin, but they want to provide financial services around Bitcoin as well. Effectively, maybe becoming a neobank in the future that is backed by Bitcoin, doing all types of things such as mortgages and other things. On the other cryptocurrencies, SharpLink and Bitmine are focusing on becoming an Ethereum treasury company. These, again, have only popped up in the last quarter. Likewise, their goal is to acquire as much Ethereum as possible and stake it and maximize what they called yield per share over time. So again, ETFs, you cannot stake Ethereum today. There are multiple restrictions. You cannot issue debt to acquire a lot of new digital assets. So these companies are trying to do things like that. DFDV, DeFi Development Corp, and Sol Strategies, and Upexi, they're focusing on Solana. So today, again, there's no Solana ETF. There's one that launched last week, but not exactly a proper structure. It's got some tax implications there. But these equities are effectively focusing on Solana. Solana, you can potentially get an 8 to 12% yield, depending on how you play that. And so ETFs cannot do that today properly, but these companies can effectively acquire Solana and get that 12% yield. And then if Solana goes up and to the right over the next couple of years, they get that boosted sort of return. And that's why shareholders go for some of these companies as well. And it would be remiss of me saying that in this rising trend, Trump is also a part of it. So Trump Media is also raising $2.3 billion for a Bitcoin treasury deal. So you'll see this is a very new space. It's very hot. It's only happened in the last sort of quarter. But this will, I think, become an integral part of crypto markets going forward. And these companies are all using creative ways to access their own capital markets in several jurisdictions. And I expect probably another 500 to 1,000 companies popping up globally across all parts of the world that are doing something similar. That is either looking at a tax hack or some sort of compliance workaround, access to investors that are mandated by either superannuation rules or trust rules to not access Bitcoin. They can access these companies, and so on and so forth. So it's an exciting trend. It's going up. There's a lot more new companies coming into the market. And the benefit over here is effectively it makes crypto more institutionalized, and more people that were previously turning a blind eye to it or ignoring the sector will be forced to look at it and assess it and understand it. And just in conclusion, for digital asset treasury companies, there's no free money in the world or in finance, as we all know. So what are the risks? The risks of these companies, of course, are they issue debt, or they issue some structured products where they become encumbered and they're forced to sell their underlying digital asset treasuries. And of course, governance. Of the 150 companies that have come across, I would say 75% of them have loose governance at the moment. So of course, their intention is to acquire as much digital assets as possible by issuing debt. But typically these debt have a lot of catches, covenants, and so they can come due in a bear market and these companies will be forced to liquidate. However, excitingly, we expect new funds to be rising up that are going to do M&As within these companies. So broadly, it is very positive for the digital asset sector and digital asset market. But of course, they come with risks. And obviously today, I don't see any risks of any major collapse because these digital asset companies are still very small. But over time, they will become larger and larger. The largest risk today is effectively Strategy or MicroStrategy, but their debt is due in 2027. So we should be good for the next 2 years. And then, of course, as the market evolves, we will be assessing it and looking at it very closely. And of course, actively managing the portfolio if we think that these companies are going to be targeted through a new law or new tax treaty or compliance or change in government, then we will, of course, act appropriately within our own portfolios and adjust our positions. So hopefully it was a good overview of digital asset treasury companies, relatively new. But as always, if you have more questions, you can ask in the Q&A or afterwards.
Pratik, do you think these companies will drive returns in the underlying assets, just like we saw ETFs drive returns in mainly Bitcoin last year?
Yeah.
Happen with these companies buying the underlying assets and driving up prices?
100%. The reason why is because their sole purpose is to take fiat currency and convert them to digital assets. So any company goes out, raises $100 million, and then uses that to buy Ethereum or Solana. Effectively, they're adding a lot of buying pressure into our market. And something like Bitcoin with fixed supply and halving inflation, that could really be a major factor in supporting prices. At the end of the day, it's demand and supply, and there's more demand coming for these digital assets than ever before through these companies.
All right, let's move on to real-world asset tokenization. So this is a really exciting area and really bringing value onto blockchains. I think up to now, the space has been dominated by basically Bitcoin as a digital gold. We have had a kind of build out of DeFi, but now we are finally getting real value on the rails that has been built out over the previous years. So we saw some really exciting announcements during this quarter. There's a company called Bakkt Finance that together with Bybit and Kraken launched equities on Solana. They will launch on BNB chain as well. So we are finally getting, these assets trading on blockchain rails, open and accessible by anyone, and composable in DeFi. So that's pretty exciting. Again, these equities can be traded 24/7, and really accessible with anyone with a blockchain wallet. The other announcement was from Robinhood. So Robinhood is a $83 billion US brokerage, mainly operations in the US and Europe, but they're expanding to other countries. But they made a big announcement during EthCC in France a couple of weeks ago, where they announced that they are launching their own Ethereum layer 2, but they're also tokenizing stocks, and that's both a private equity like SpaceX, OpenAI, and other companies, as well as listed equities. So they will start doing that on Arbitrum first, and then they will move to their own Ethereum L2. So that's a really big announcement, and I think it was well received by both the crypto markets, but also traditional finance. You saw Robinhood shares performing really well after this announcement. On the chart to the right, you can see kind of the rise in real world assets, and this is not including stable coins. We could say stable coins is a form of real world assets. They have been doing really well, and we'll talk more about stable coins. But this chart you're seeing there on the right is X stable coins. So we've seen a really fast growth in value there, mostly from private credit, which is Maple Finance, if you're familiar with that. We'll talk more about Maple later as well in this presentation, but also T-bills. And now we'll start seeing stocks as well being traded on-chain on the blockchains. So that's pretty exciting and one of the big narratives in the market. All right, we'll move on to the outlook for the markets, both when it comes to macro, tariffs, inflation, and so on, and crypto outlook. We'll talk more a bit about some of the big narratives, and then we'll end up with how we're positioning our portfolios currently. So, Pratik, I'll let you talk about the latest when it comes to tariffs.
Yep, thanks, Henrik. So we've all seen tariffs Liberation Day, April 2nd, Trump going back and forth, and it's still an ongoing thing with the current deadline on August the 1st. So firstly, decentralized technology is not a target of any tariffs, and in fact, by design, it cannot be tariffed. It's like the internet; you cannot sort of block it. It's a network, and there's no way to tariff it at all. And many people might not know, but the network is so resilient now that there are satellites in space that are streaming the Bitcoin blockchain today. If you're interested, you can go to blockstream.com, and you're going to notice that there's a bunch of satellites in space that are streaming Bitcoin blockchain. So effectively, it's a network, and a network only goes stronger the more people that join it. And as more people join the crypto networks, it gets harder to break or do anything. Now, tariffs have emboldened the use of alternate currencies and modes of payment. A couple of years ago, when the Russia-Ukraine war started, you remember that the US just freezed a whole bunch of Russian assets and their treasury bills within the system. We're seeing more and more capital controls in Europe. In Europe, I think it was Greece or Spain that had a limit of $2,000 ATM withdrawal per week. And we're also hearing news of that in this part of the world going forward. So tariffs have emboldened the use of alternate currencies as people look at different options. And in the wealthy circles, at least what I'm hearing, I think a lot of people already realize that eventually the wealth gap and all of these things will lead to some sort of asset control, asset seizure, or some sort of exorbitant taxation. And so it's typically done through currency controls or capital controls. And so a lot of people are leaning into alternate forms of currencies that cannot be tariffed or controlled by a central authority, i.e. Bitcoin, and now rising Ethereum and other stable coins. Stablecoin growth and issuance is at an all-time high. It is quite crazy the amount of growth that is going on in stablecoins. Most tier one banks in the US have indicated that they will issue a stablecoin in some shape or form. And the growth in stablecoin benefits the rest of the ecosystem. An example is one from this morning. There's a NASDAQ listed entity called BTCS, and they had to draw a loan and had a lot of Ethereum in their balance sheet. So they could have gone to the traditional brokers or to traditional capital markets and pledged their Ethereum and have taken a loan at an interest rate of say 5, 7, or 8%, given risk-free rates about 4.5. They were not getting anything below 7 or 8%. They decided to go to Aave, which is the premier blue chip DeFi lending protocol, and it secured a loan for less than 3%. And we expect as stablecoins grow and these things go, even traditional companies are going to look for alternate forms of raising capital, and DeFi is poised to benefit from that as the entire sector grows. And so would anybody. I mean, as DeFi grows, if you can fix your home loan or something at 2%, you would do it versus 5 or 6 that the banks might be offering. So we think this entire space is going to grow, and there's a lot of new protocols and companies being formed to service that niche. And this screenshot actually resonated with me. It's from Lynn Alden. She's a macro strategist. And she said it's harder for her to spend Egyptian pounds in New Jersey or in the US than it is to spend Bitcoin. And it's the same for 100 plus other currencies. So I went into a little bit of a rabbit hole, and I realized that that Bitcoin's daily traded volume is about $45 billion today. And it is more today than the Swedish krona and the Norwegian krona and even the Taiwanese dollar. These are large economies with millions of people, but Bitcoin trades more than their currencies. And I'm not even talking about the long tail of currencies in 180 different countries, but Bitcoin's already effectively forming that deep liquidity, alternate sort of form of currency in the market compared to even developed economies in Europe. So expect that trend to continue going on in a world of tariffs, multipolarity, increasing debt, and currency wars.
This must be one of the first examples, at least what I've heard of a listed company accessing lending in DeFi.
Yep.
So it's
from this morning.
Yeah. So that's pretty significant. We probably will see more of that.
Yeah. And then, as the saying goes, currently nothing stops the debt train. I want to draw your attention to the top right screenshot. People like or hate Ray Dalio, but he has a deep understanding of debt cycles and how they played out in the past. And effectively, Dalio went to Washington, D.C. to speak to both the left and the right and ask them, how are we going to solve this? Because eventually this will end up eating up all tax receipts. And his conclusion was, with a lot of frustration, that it is clear that the US is unlikely to change its debt trajectory and will eventually have painful consequences. We already know about the Doge fallout. The intention of Doge was supposed to cut government debt and bring it down significantly. The reverse happened. Elon Musk and Trump ended up fighting, and Elon is creating his own political party, and they created the Big Beautiful Bill, which is actually inject another $5 trillion versus reducing debt. It echoes with Dalio's sentiment, and it echoes with the chart on the right as well, where it doesn't matter if it's the left or the right, the debt continues to increase. Following on, of course, Musk said fiat is hopeless. I think a lot of us in this camp already know this inherently for the past 5 years, but more and more people are going to rise to this. Effectively and essentially, I think fixed income investors and bondholders that have long duration bonds, whether it's 10, 20, 30 years, we have a saying in our markets that friends don't let friends buy bonds, because we can see the gross inflation that is actually happening and money printing that is happening, where governments are going to use mechanisms to basically print their way out of this debt. So, getting 4% or 5% on a 30-year fix is, in our opinion, a mistake, because the debt will continue rising pretty rapidly from here. And there was, of course, from Philippe Lafont, who is the CEO of Coot Asset Management. He was came on CNBC and said that I wake up every day at 3 a.m. in the morning and think, why am I such an idiot? He thinks so because 13 years ago, someone told him about Bitcoin, and for 13 years, he's just been watching it, but never actually invested in it. So I think more and more people are going to come to that realization as we go forward. Some people think we're already very mature. I think 90% of the capital out there still hasn't really understood crypto or has access to actually investing in size. So we're still in the beginning phases of all of this, I believe. And of course, globally, citizens will seek alternates as debt rises and they're overtaxed and overburdened with various mechanisms. And so Web3 rails are the best to get out of these systems. In the West, typically our currencies are pretty good. But for the 180 other countries, they're going to look for alternates. And that's going to be through stablecoins, Bitcoin, Ethereum, Solana, and effectively staking them or using DeFi to draw loans and do various different things. So expecting that to increase in a multipolar world as well as we go forward.
All right. We'll touch a bit on some of the current narratives, and I think we mentioned some of them previously in this presentation. The first one is revenue. It's more than a current meta. It's really what is driving value in altcoins now. I think that's great to see. It's great for us as an active manager. Our portfolio is really starting to outperform because we hold crypto assets that are generating a lot of revenue. They're doing buybacks. If you're staking those tokens, you're taking part of the network and are earning some of that revenue. So that's really kind of great to see. It's really important what you hold, what assets you hold in the crypto markets. And I think this is probably the first time we have seen that in altcoins ever. So I think in previous cycles, it was less important what you actually held when it comes to altcoins. But now our research and fundamental-based investing is really starting to pay off in a big time because we're really, I think, good at identifying those crypto assets that have the potential to generate revenue or is currently generating a lot of that revenue. And those tokens are really benefiting in this market. Second one is, as we talked about, Bitcoin adoption is gaining speed, and especially among investors that are looking for diversification. There are a lot of uncertainty in the world. We talked about fiat and what's happening there, but there is also a lot of other macro uncertainties at the moment, and Bitcoin is becoming this potential digital gold. And that's why one of the reasons why it's performed so well in the last time period. All right, moving on to stablecoins. I think we have seen an explosion when it comes to the use of stablecoins when it comes to companies announcing that they will adopt stablecoins. So stablecoins is around 200 billion currently. We think that will grow to 1 to 2 trillion in TVL over the coming few years. So we're just in the beginning of the rise of stablecoins. Tether, which is the biggest one, made a $13 billion net profit in the last financial year. It's one of the most profitable companies of all companies in the entire world. And a lot of other companies are seeing this and kind of want to launch their own stable coins to take advantage of this trend. So we're seeing a lot of fintechs, a lot of banks, even some of the largest retailers in the world are looking to launch stable coins. And on top of that, you will see some of the largest social networks launch their own stable coins. So these are all running on crypto blockchains, crypto rails, on Ethereum, on Solana, and they're all interacting with DeFi, and we have a really good exposure on those protocols. The last narrative that we like to highlight is the tokenization, and that's something that we already talked about, but that's finally happening, and I think that's really positive for the entire industry in the coming years because that's again bringing real world value onto the crypto rails. Finally, the chart at the bottom here is just an example of revenue. This is Sky Protocol, previously called MakerDAO. In the last 3 months, they have bought back over $1 billion of Sky tokens using their revenue that are generating real cash flow. 1 billion Sky tokens is more than $80 million, which they have bought back in the market in the last 3 months. All right. Patrick, do you like to talk about what the portfolio looks like currently and our thinking around the portfolio?
Yeah, sure, Henrik, thanks. Before I even begin about the portfolio update, I'd like to highlight that we changed our strategy earlier in the year, and that strategy is bearing a lot of fruit. So as Henrik mentioned before, we have outperformed across all funds. We've outperformed Bitcoin and all relevant competing indices. So Bitcoin did about 25% in AUD. Our Apollo Crypto Fund did 28%. But even better, the concentrated portfolio strategy in the Apollo Crypto Frontier Fund did 45%. So 45% in a quarter is pretty good. We're very proud of it, very happy. By way of comparison, the S&P Crypto Index, a mega cap index, only did 8.47%. So our 45% is a testament that the strategy is working, and that the market is developing in the direction that we believe it is heading it towards. Again, the ACF are concentrated portfolio and high conviction projects. Bitcoin, Ethereum, and Solana, we are very confident will dominate 90% of the activity, and all other long-tailed chains and assets will drift slowly towards zero. We're focusing towards liquid strategies rather than primary deals at the moment. And we are also effectively generating yield on the majority of assets in our portfolio, including Bitcoin, Ethereum, Solana. They're all over 90% used to generate yield in a portfolio, which gives us that extra 5 to 7% across various of these assets. And some of the top picks in our portfolio include Hyperliquid. This actually ties into Henrik's previous slide. One of the interesting things about crypto is you could have a 10-person or 15-person team that is making $1 billion a year. And you could then use that money to buy back your own token, which is what we're seeing in this market at the moment. Compared to traditional companies, you have a lot of overhead costs with regards to staff, labor, physical office space, and all types of things. But in crypto, by design, you could have a 10, 15 people company scaling a multi-billion-dollar project. And it's very common to see that in crypto. Historically, revenue wasn't passed on because of regulations, but now we're seeing more and more revenue being passed back to token holders, which is fantastic. So Hyperliquid's clearly a clear winner here. It makes more money than all the brokerages in the world today in terms of per person, per staff count, and also things like Robinhood and so on. And I think eventually it will come for traditional brokerages in various different countries. Euler is a fast lending and borrowing protocol with newer features, and it's quite integral to all the real world assets that are coming up into the market. Sky, previously known as Maker, is the largest on-chain stablecoin issuer, $11 billion, and it has significant earnings and uses the majority of them to buy back its own token as well. Pendle is also really good. It is an yield protocol and a proxy for stablecoin growth, and you could consider it if you are fixed income investors. How you get a bond, but you're going to get an interest, but you'll see that interest in 10 years, for example, and you're going to get quarterly or annual sort of interest payments. Pendle is a way to basically monetize all of that upfront if you wanted to. So it's a very interesting protocol. We like it a lot, and it's growing very rapidly. And Syrup is bringing traditional finance into on-chain with transparency and DeFi composability. So Syrup USD, effectively, some of you might be private credit investors. Private credit yields 8 to 12% per year, but it's quite opaque, quite difficult to sort of get liquidity over there. Syrup has actually packaged that all up, and it provides about an 8% yield on its stablecoin, backed by a blue chip book of crypto and also other types of lending protocols. So it's being used quite effectively in all of DeFi, and we're expecting that grow very significantly. And a lot of historical traditional finance sort of credit issuers coming on chain, exploring these ideas because they can tap liquidity very quickly using crypto rails. So that's a wrap up on the portfolio update as well, and always happy to answer more questions in the Q&A.
Yeah, thank you, Pratik. So I think with that, we'll move to Q&A. So use the Q&A function in Zoom and put in your questions there, and we'll try to answer them. So I think we got a few questions already. Yeah, we have one question. Patricia asking, due to your great performance, will you be able to pay a financial year 25 distribution for the Apollo Crypto Fund? Yes, we will pay a distribution. It hasn't been finalized yet, but we hope to finalize the exact distribution amount in the coming weeks. So yes, is the answer.
I can take the next one, which is from Gary, who says DATs or digital asset treasury companies are very interesting. What's to stop a market regulator identifying a DAT and determining that they're functioning like an ETF? And then so they should get treated like an ETF. Yep, that is 100% a risk in the future that we watch out for. A lot of these companies are clear from a regulatory perspective right now, but that's true because it's Trump, and the SEC is also very pro-crypto, and one of their core mandates is to grow crypto as an industry. So I think from a regulatory perspective, no one is looking here. Everyone's turning a blind eye for now. But I expect if there's a change in government or the SEC in the future, then these companies can be targeted. Now, Bitcoin and Ethereum have been classified officially as commodities, so they are in the clear. But some of these other companies that are doing it for, say, Solana or Hyperliquid, these haven't 100% been cleared as commodities yet, or at least it's still in a gray area. So we should, and they could be targeted in the future. However, I'm expecting all of them to be cleared before the end of the Trump campaign. And we are already seeing ETFs rise for some of these altcoins. And once that ETF is out, then the market is very mature. And it's very hard to reverse after that. So they could be targeted. Yes, that's true. But we think it's going to be cleared by the end of the Trump presidency. And then anything can happen with the new government and SEC. And the next question is from Larry. DCC recently raised $20 million, and a bunch of large companies have contributed to the raise. Yes, they have. We saw the news yesterday. It's exciting to see an Australian company do the same and get onto the digital asset treasury company space as well. Any commentary on DCC? I mean, the best way to look at it, I think, is look at the MNAV. You can look at the digital assets on their balance sheet. You can look at the current market capitalization. You can see how much they want to dilute. And then if you trust the governance of the company, to expect it to go up and to the right and to grow their digital asset treasury base going forward. So I think it's fantastic that DCC is doing it. Of course, the end goal for DCC would be potentially, getting into growing their market cap and getting into a bunch of indices and small cap fund managers, and then eventually working their way up to Big Super. If that happens, it's a multi-year journey, but that will rely heavily on governance and other things on how they navigate this. And there's about 500 different companies globally fighting for the same capital. So of course, in Australia, we have a really nice superannuation system which has a lot of money that is forced to allocate. So hopefully it gets some of that money. But to be seen. That's a very new concept, and I think Super moved very slowly, and it's still going to take them many, many months to recognize this and maybe approve this.
All right, great. We are exactly at the 45-minute mark. So if there are no more questions, we could probably end it here. I just want to say this is a very exciting time in crypto markets. We are, the regulation is changing. We are seeing the tokenization of real world assets. We are seeing the growth in stablecoins. So we think the outlook looks pretty great right now. Bitcoin reached an all-time high today as well. Any sort of closing remarks from you, Pratik?
No, I mean, I'm very optimistic about the space and digital asset treasury companies, options market coming on, more institutions coming in, more stable coins coming in. It's all developing really, really well for crypto. So I'm very optimistic about the future.
Sounds great. Thank you to all the participants today. Thank you, Pratik, and we hope to see you all in the next quarterly webinar.
Thanks, Henrik.